in the world, incredible scuba diving and snorkeling, and world-class culinary offerings. Book your trip today and fall naturally in rhythm with the heartbeat of the islands, where the sun is strong, the clouds are few, and the weather is perfect every day. Travel from New England could not be easier, with no passport required, no money to exchange, and no travel restrictions to enter. Go to visitusvi.com and learn more about America's Caribbean paradise and book a trip today. That's visitusvi.com. There are plenty of mistakes that you can make while creating your estate plan. Learn about these critical errors so that you can make the right decisions to always protect your assets. Call Cushing & Dolan right now at 866-848-5699 and get their new guide called Detour Ahead, Estate Planning Blunders to Avoid. That's 866-848-5699 or request it online from their website, legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by taking part in this year's DAV 5K. For more information, visit dav5k.boston. The DAV 5K Boston is proudly presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Hello, Michael. I said hello, Michael.
Charles.
Ah, there we go. Now we're ready to rock and roll. It's Chuck, Mike, and Tucker with you on the Friday before Memorial Day. Maybe you're on the road heading up to...
Beautiful New Hampshire?
You said that sarcastically, but it is beautiful up there.
Well, I was trying to do my best. What about Bob? New Hampshire? You guys never seen What About Bob?
I have, but it's just...
That's a stretch, though, yeah.
It's not really fitting.
No. Okay.
Anyways, you might be on the road going somewhere nice. Maybe it's New Hampshire. Maybe it's Maine. Maybe you're heading up to, Nova Scotia. Maybe you're heading down to the Cape, down to Rhode Island, wherever it is, the Lakes region, Vermont, whatever. We got all kinds of stuff to talk about today, including some new data that came out this morning. We've been talking nothing but debt ceiling all week, and so we'll get to that. But let's talk a little bit about what we saw from economic data this morning. We got the PCE price index. We got personal income and spending. We got durable goods orders. A lot of stuff to get through. Where do you want to start?
I guess let's start with the all-important PCE.
The personal consumption expenditures price index.
And I
the
say
Fed's
all-important
preferred
because
inflation
it's the
measure.
Fed's preferred inflation measure. And it is important, but quite honestly, as people who listen to the show frequently know, everything that is in here is just kind of a regurgitated and reorganized version of CPI. So I didn't find anything particularly surprising here, at least in the inflation side of things. Spending was interesting, but the Fed's total target for this stuff
was a little hotter than expected month over month.
Yeah.
Feeling hot, hot, hot.
I don't know if it's Michael Scott feeling hot.
I mean, if you annualize today's number, it's a 5.1% pace.
As opposed to the CPI, which is 4.9.
5% is not cool inflation.
No, it's not. But I'm not sure anybody was really expecting it to be like. Well, clearly expecting it to be a little bit cooler.
We're
than
expecting it to be cooler than this.
Yeah.
So I'm just saying the inflation picture is not resolved yet. It's
Feeling hot.
Yeah. And what you have on this is the probabilities for the June Fed meeting are now 57% for a hike.
Yeah.
Probabilities for the July meeting, you get a 27% chance of 2 hikes then.
Yeah.
I mean, this is again, things are different. This is why when we were talking earlier in the spring, after the Silicon Valley Bank collapse,
Rates coming down.
Oh, rates are going to be coming down by July. No, they're not, you idiots.
What about
I'm
this
sorry,
economy
but
looks to you like it's
it
failing?
warrants that type of slapping. It's just not required. You don't need rate cuts now.
Well, no, and markets are finally realizing that.
Yes, which is good. It's so interesting to me that for 20 years, all that markets wanted to price in were the Fed hiking. Mm-hmm. It was that this is going to be the year the Fed hikes. Rates are going to go up. Rates are going to go up, and they almost never did. And now for the last year and a half, it's, well, rates have to come down.
Yeah.
They can't stay up. I don't know why the market can't just be right.
So let's reprice this then. So I would argue, I think I would agree with you that based on what we have today and frankly what we're going to receive before the next Fed meeting, it's tough for me to come up with a data point that could convince the Fed that, well, there's no way they can convince them to cut. I have a tough time saying they should even stay where they are, although I think that's a possibility. But I don't think there's a whole lot of data that could possibly come out between now and when's the second meeting, July or August?
The next, so
Two
Fed
meetings
meetings
from
from
now.
now?
Yeah.
July 26th.
So I'm trying to think of what data could come out that we're not already aware of between now and July 26th that would prevent at least a 0.25% interest rate hike. And there's really not much, right? The employment data is pretty much baked. We kind of know what's going to come out between now and then because we see it in the initial jobless claims. We could see something weird in terms of inflation, but I'm not really sure what could drive prices down significantly between now and then, right? I mean, we're going to see a huge drop in housing prices. I don't think so. So I would agree that I think rates likely heading a little bit higher, and I do find it interesting that markets don't seem to care this year.
The only piece to watch out for is China on that side of things, in that the Chinese economy is cold.
No
okay,
bueno.
It is the opposite of Michael Scott right now, and specifically, you're seeing this reflected in industrial commodity prices: copper, steel, cement, potash,
So
all that
demand
stuff.
side is not looking good from China.
It's just it's the overall amount of Chinese economic activity is probably negative right now. And the way that China has historically dealt with that, you don't have to go back too far. You got to go back to August of 2015. I remember it very well because it was the same day that in Massachusetts, they basically torpedoed half the Green Line extension. And what you saw at the time was that the Chinese government decided to conduct a significant devaluation of the Chinese currency, which, if you look at the mechanics of how that works, it effectively is called exporting deflation because the Chinese government says, look, we've got a problem with a lack of economic activity here. We've got deflation going on.
Yep.
What are we going to do to remedy that as a country that, exports a lot of stuff? We're going to devalue our currency, which A, allows us to print more and get more into circulation, but B, it also means that our stuff is cheaper on the world stage, and so more people might say that they want to buy stuff from us because they can get better pricing now in their own currencies. And so what you end up with then is if you get better pricing in your own currency, we've got, prices coming down, but it also sucks economic activity away from other parts of the world because you say, okay, I can get all these bargains in China and so on and so forth. So you end up with more deflationary pressure elsewhere. Does it filter through in a month?
I don't
No.
think so. Yeah.
It doesn't. But if you want something interesting to watch in the second half of the year, this is it because the Chinese economy is really rather bad right now.
So that'd be an interesting thing to play out. I do wonder on the net impact to everything here in the United States, given the spending focus away from goods at the moment. Right? China, exporting deflation, if you will, probably not going to make my trip to Disney World any cheaper.
No, and it also is something that then does affect all other capital markets as well. If you look at how U.S. markets performed during that time period, it was a very bad few weeks that you ended up with. So it's not necessarily a good thing for capital markets if you see something like that in the short term.
How much do you suspect? I mean, demand issues in China, I know they're facing a number of different ramifications from trying to reopen their economy. How much of this is just a demographic shift on the part of China that we're seeing play out here? Because we talked about how India is overtaking them in terms of the largest population in the world. They've got, seemingly to me, a serious problem with trying to push development. They've got a much larger educated workforce now, and those educated individuals are kind of coming into the workforce and not finding middle-class jobs for them. And there seems to be a societal real push here where the government wants highly educated people to get into manufacturing. Those 22-year-olds are saying, hey, I'm an only child and I'm actually pretty well off right now. No, I just got a degree in mathematics. I'm not going to go work on a manufacturing floor. Like, I have a tough time seeing how all this plays out there.
I don't think that the Chinese government, like most authoritarian top-down regimes, has a good answer for what comes next at this point. I think that they have benefited from the fact that, I don't want to say that no one took them seriously over the last 30 years, but no one really viewed China as a true threat from an authoritarian perspective. And I think they're viewed differently now. And so, like, foreign investment into China has dropped significantly in the last couple of years. And the demographic issues there are some of the worst demographic issues in the world.
Yeah, it's not just a shrinking population is a huge problem. Don't get me wrong. But it's further that they are investing tremendously in education and have been fairly successful at that, but then don't have an economy for those educated individuals to work in because they have been so focused on things like devaluing their currency to make exports more attractive.
Well, and here's the thing, that the Chinese economy can't transition away from manufacturing because without the net flows of capital into it, it doesn't have the ability to actually provide the services that it does right now. It can't stand on its own. So this is a very real problem for China. I don't know how we got here.
Yeah, we started off with inflation.
We were talking about PCE inflation, and somehow we ended up with Chinese demographics.
We did, yeah. I've just been wanting to talk about Chinese demographics for a little while, so I was just looking for an opportunity to pounce.
It's like the petting zoo.
Go on.
Bad. That's what the demographics are there. China has petting zoo demographics. That's how I'll define it. Let's take a quick break now, and when we come back, we'll talk about why some economist is saying that a recession would be good news right after this.
Text us at 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we are covering. This is the Financial Exchange Radio Network. The United States Virgin Islands, St. Croix, St. Thomas, and St. John were recently voted a top Caribbean destination by Travel and Leisure magazine and several other top media organizations, as well as the best Caribbean islands to visit in 2023 by the Caribbean Journal. Spring has arrived in New England, but it's still a perfect time to head to America's Caribbean paradise. When you arrive, you'll enjoy some of the most pristine beaches in the world, incredible scuba diving and snorkeling, and world-class culinary offerings. Book your trip today and fall naturally in rhythm with the heartbeat of the islands, where the sun is strong, the clouds are few, and the weather is perfect every day. Travel from New England could not be easier, with no passport required, no money to exchange, and no travel restrictions to enter. Go to visitusvi.com and learn more about America's Caribbean paradise and book a trip today. That's visitusvi.com.
My name is Dottie. This is my VA story. My father served in World War II. He was my hero. As he got older, he needed more help. VA New England Healthcare was there for him and our family every step of the way. VA New England Healthcare offers unlimited healthcare options. The best part? It never cost our family a single penny. As a veteran, my father deserved the best, and so does a veteran in your life. My name is Dottie, and I choose VA.
For more information, call 1-844-VA-CARES or visit vacares.us.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange Quick Tip of the Day. And today we're talking about the top estate planning mistakes to avoid. Todd, what is the downside of adding your beneficiaries to your accounts or adding their names to your real estate deeds as a joint owner? Won't this avoid probate?
Yeah, it sure would. And again, sometimes simple is not always better. And that's what I want to focus on here, folks, is it seems easy to throw an account name, like say I've got a child living nearby, I add their name to my account because it's convenient, but I've got 3 other kids or 2 other kids. Well, when I die, that asset will go directly to that joint owner. Yes, it will avoid probate, but at the end of the day, I could be disinheriting my other children by accident. I certainly don't want to do that. I also expose that asset, at least 50% of that asset, to my child's creditors while I'm living. I don't think I want to do that. And especially, folks, when it comes to real estate, don't add a child's name to your real estate deed, because that not only exposes it to the child's creditors and future divorces, but at the end of the day, you've also given away half the house, trapping half the capital gain in that property. Again, in essence, giving your child a tax bill when you give away highly appreciated property. So do an entire estate plan. Don't just make quick knee-jerk reactions.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide called Detour Ahead, Estate Planning Potholes to Avoid. You can request this brand new guide by calling 866-848-5699, or you can request it from LegalExchangeShow.com. Once again, the phone number, 866-848-5699, or you can simply request it online at their website, LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play the Financial Exchange. This is the Financial Exchange Radio Network.
All of us at the Financial Exchange are excited about this year's DAV 5K. Save the date for Saturday, November 11th for this year's race at Fort Independence at Castle Island. Our partnership with the Disabled American Veterans Department of Massachusetts is a cause that's near and dear to all of us. So visit DAV5K.Boston, make your donation today. Your gifts can sponsor a veteran's family member at summer camp, as well as veterans who are homeless or hospitalized. That's DAV5K.Boston. The DAV5K Boston is proudly presented by Veterans Development Corporation.
Mike, talk to me about why a recession is going to be good news.
It's not. We have some, is he an economist? Is he an analyst out there saying that it could be good for markets? Here is the, it's the founder and CEO of Destination Wealth Management. I know nothing about this company. CNBC picked it up here. Here's his argument. If we don't get a recession, then it's going to make the Fed's job even more complicated because inflation is going to be high. That sounds so less complicated than trying to deal with millions of people out of work. He's very hyper-focused on the markets here. He's not talking about, he's specifically saying it's better for the markets seemingly over the next, he talks about over the next 12 months, I think is his thesis here, if the U.S. economy goes into a recession. And I can think of no compelling evidence why that would be the case.
Well, the argument that he's making is pretty much, hey, I want rate cuts so the market will go up.
Yeah.
And rate cuts heading into a recession don't inherently mean that happens. Not every recession is like this, but in 2008, just as an example, because it's, rather...
The biggie in anyone that's still alive's lifetime.
It's rather...
Most people who are still
front and center for us. If we look at the effective Fed funds rate during that time period, and I'm just pulling it up now just so I have the dates etched in my mind. On May of 2007, the Fed funds rate was at 5.25%. It was cut down to pretty much zero, 0.5%, by November of 2008. Obviously, that did not spur the market to all new highs because the market finally bottomed in March of 2009, depending on the index you were looking at, almost 50%, or in some cases more than 50%, off of its previous highs.
Are some people under the impression that a recession is just some magical one-time economic event that doesn't have any other impacts other than killing inflation? Because that's not really what a recession is. It's not just an inflation killer.
Maybe
there's a reason that it's an inflation killer. It's because it's painful, decreases earnings, increases unemployment, and causes a whole bunch of stress and pain.
Typically increases your debt to GDP ratio. I mean, like there's pretty much nothing good that comes out of recession other than you can view it as, again, if you want to make this case, I don't know that I'm fully on board with it. Hey, this is how we deal with really high inflation, is eventually we got to have a recession to get demand and supply back in balance. And even that's kind of like, hey, here's a bunch of leeches. Let's see if they suck the poison out.
Yeah.
You know, it does.
I would much rather be dealing with 3.5% unemployment and 5% inflation a year from now than 5% unemployment and 3.5% inflation a year from now.
Well, I think the case that you would make is if you have a recession, inflation would be back to normal levels.
Yeah.
So I think it's here's the thing.
I mean, let's ask this question. Maybe I'm crazy. Would you rather be dealing with this economy now, which let's call it 5% inflation, 3.5% unemployment, or one in which inflation is gone but unemployment's sitting at 6%?
For how long? Because that matters. If we're talking 5% inflation for a decade, then no, I'm not taking that in any circumstances.
Sure.
If we're talking 5% inflation for an additional 6 months, yeah, I'd rather have people working. But the problem with 5% inflation is that it very rarely in history lasts for just 6 months.
Yeah.
And that's why we typically do a lot of things to push against it. And ultimately, as we've come back to a lot, the reason why inflation is bad ultimately boils down to because people don't like it. That's the technical, fancy explanation. There's nothing else other than that makes it inherently bad. If you're a company and you maintain your margins, and now you're making 5% more in revenue, and your earnings have gone up proportionally because your margins are maintained, hey, stock price should go up, all else being equal.
I think beyond people don't like it, I think it cuts to the core of people's belief in the financial system. Like if you are
people don't like it. That's what
I know, but I'm gonna extrapolate that a little bit further to say, if I genuinely thought that inflation was going to be 5% year after year after year after year, then it would shake my foundational belief in how that economy works and change my behavior. And yeah, they don't like it. Effectively, is that's another way of saying that, but it goes beyond just, oh, I'd be complaining about it.
No, inflation's the kind of stuff, it topples regimes.
Yeah.
We saw this last year. The freaking Sri Lankan president had to get on a cargo ship to escape.
Right.
I mean, this is why governments get so nervous about inflation, is because ultimately it's when it gets to the levels where it's high enough that you're pretty much dealing with shortages in food, shelter, and energy, that's the kind of stuff that topples regimes. Mm-hmm. It scares the crap out of governments.
Yeah. Well, it should.
Because it's again, there's nothing more than people don't like it. It makes them unhappy. When the same thing that previously cost $1 now costs $2 and is not meaningfully different, it gets everyone asking questions.
Yeah.
From a pure economic perspective, there's nothing wrong with it, but it makes humans unhappy.
Okay.
Not like price go up.
Caveman Chuck.
Meat too expensive.
Yeah. Yeah.
Can't afford bun for burger on Memorial Day.
Yeah.
Take break, come back with Wall Street Watch.
Like us on Facebook and follow us on Twitter at TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Creating the right estate plan to help secure your future takes effort. There are plenty of mistakes that you can make, any one of which could have a dramatic and damaging effect on your financial strategy. Cushing & Dolan are experts in estate planning. Their brand new guide is called Detour Ahead, Estate Planning Blunders to Avoid. In it, you'll learn about these critical errors so that you can make the right decisions to always protect your assets. As an example, if you've created a trust more than 10 years ago and haven't updated it since, you're setting yourself up for problems. Cushing & Dolan's new guide will help you address issues like this, so call right now, 866-848-5699, and ask for your free guide today. That's 866-848-5699, or request it online from their website, legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Financial literacy is power. The more you know, the better you are at managing your money. In observance of National Financial Literacy Month, consider a credit union as your educational resource. Did you know we offer classes and guidance on money management? From establishing credit to buying a new home or saving for retirement, your financial well-being is at the heart of every credit union.
Learn more about credit unions at bettervaluesbetterbanking.com.
More than 80 million Americans depend on AM radio for their news, weather, sports, and a community connection. It's the backbone of the emergency alert system. It's critical that we keep AM radio in cars because when cell and internet services are down, this free emergency service could be your only lifeline. Text AM to 52886 and tell Congress we need AM radio in cars.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
The United States Virgin Islands, St. Croix, St. Thomas, and St. John were recently voted a top Caribbean destination by Travel and Leisure magazine and several other top media organizations, as well as the best Caribbean islands to visit in 2023 by the Caribbean Journal. Spring has arrived in New England, but it's still a perfect time to head to America's Caribbean paradise. When you arrive, you'll enjoy some of the most pristine beaches in the world, incredible scuba diving and snorkeling, and world-class culinary offerings. Book your trip today and fall naturally in rhythm with the heartbeat of the islands, where the sun is strong, the clouds are few, and the weather is perfect every day. Travel from New England could not be easier. With no passport required, no money to exchange, and no travel restrictions to enter. Go to visitusvi.com and learn more about America's Caribbean paradise and book a trip today. That's visitusvi.com.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange Quick Tip of the Day. And today we're talking about the top estate planning mistakes to avoid. Todd, what is the downside of adding your beneficiaries to your accounts or adding their names to your real estate deeds as a joint owner? Won't this avoid probate?
Yeah, it sure would. And again, sometimes simple is not always better. And that's what I want to focus on here, folks, is it seems easy to throw an account name, like say I've got a child living nearby, I add their name to my account because it's convenient, but I've got 3 other kids or 2 other kids. Well, when I die, that asset will go directly to that joint owner. Yes, it will avoid probate, but at the end of the day, I could be disinheriting my other children by accident. I certainly don't want to do that. I also expose that asset, at least 50% of that asset, to my child's creditors while I'm living. I don't think I want to do that. And especially, folks, when it comes to real estate, don't add a child's name to your real estate deed, because that not only exposes it to the child's creditors and future divorces, but at the end of the day, you've also given away half the house, trapping half the capital gain in that property. Again, in essence, giving your child a tax bill when you give away highly appreciated property. So do an entire estate plan. Don't just make quick knee-jerk reactions.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide called Detour Ahead, Estate Planning Potholes to Avoid. You can request this brand new guide by calling 866-848-5699, or You can request it from LegalExchangeShow.com. Once again, the phone number, 866-848-5699, or you can simply request it online at their website, LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, we're heading into Memorial Day weekend, and markets are in rally mode, where investors are reacting to several reports of some progress made in debt ceiling talks, in addition to a new inflation reading via the core PCE index released this morning. At the moment, the Dow is up by 351 points, just over 1%. S&P 500 also up over 1%, or 44 points. And the tech-heavy NASDAQ having a nice day again, now up nearly 1.5%, or 181 points. Russell 2000 is up by 0.5%. 10-year Treasury yield, that is flat at 3.82%, and crude oil up by 1.33%, trading at $72.83 a barrel. Shares in Costco are up 1.5% after the warehouse retailer missed on quarterly earnings, declining 7.6% from a year ago to $2.93 per share, while the company's revenues climbed 1.9% to $52.6 billion. Membership fees also rose 6.1% to $1.04 billion. Costco's average daily transactions were also down 3.5%, with the company cited weakness in sales for big-ticket, non-discretionary food items. Meanwhile, Marvell Technology reported first-quarter results that beat forecasts on the top and bottom lines. The semiconductor company posted adjusted earnings of 31 cents per share, above expectations of 29 cents, while revenue came in at $1.32 billion, also above forecasts of $1.3 billion. Furthermore, Marvell said it anticipates revenue growth will accelerate in the second half of the fiscal year, and that stock is surging by 26% today. And Gap shares are up 11.5%. after the struggling retailer posted another quarter of net losses and declining sales across its 4 units. Sales fell to $3.28 billion, down 6% from a year ago. However, the parent company of Old Navy, Banana Republic, and Athleta did note it is seeing progress and has significantly improved its gross margins. Gap attributed its improved margins to reduced promotions and lower air freight expenses. I'm Tucker Silva, and that's Wall Street Watch.
Do you guys know where the name Banana Republic comes from?
No.
Latin America?
Yes, but do you know why?
I don't know.
So specifically Central America.
Yeah. Big fan of chinos. I don't know.
So what you had all of these countries in Central America that were big banana producers.
Yeah.
And what effectively happened was U.S. companies came in and basically overran the local governments, and so these big banana exporters were effectively dictating policy for these countries that they weren't even really based in. And so hence the term Banana Republic.
Got it.
It's a place where the government really doesn't have any control over what's going on.
Run by a private corporation.
Yeah, there you go. Banana Republics. It was coined in 1904, I believe, is when the term originated.
There you go.
Let's talk a little bit about the debt ceiling negotiations. We're not going to talk about what it means and everything because we've done that too much.
Too many times.
But some real progress being made now that we are getting down to the last few days before the projected X date. And what it looks like is taking shape. And again, this is all subject to revision and negotiation, but what looks like is taking shape here is a 2-year spending deal that would also raise the debt ceiling for the same amount of time. And in general, it looks like for next year in the aggregate, you would likely see federal spending held completely flat, and the year after, you would see it increase by potentially just 1%. Now, the other portion of that is that in order to fund some of these programs, you are likely going to see some of the $80 billion allocated last year in the Inflation Reduction Act towards the IRS, that flowing towards other departments that would allow them to, grow their budget in those years, but the overall top-line spending not go up. So that's how everything seems to be shaking out at this point. We don't have many details or anything, yet in terms of specifics.
It's just leaks at this stage, yeah.
But I remain very convinced that you are going to end up getting a deal here, which is why ultimately I think that everyone freaking out about, what happens if you don't. I think it's scary if you don't, but I don't think there's much of a chance that there's no deal.
The number that I'd heard tossed around was about a 2-year extension, which they don't do it that way. It's a dollar extension, but effectively sending it out by 2 years.
Yeah, it would be out to somewhere in mid-2025.
Yep.
And this would also be pretty much setting the framework for the budget for the next 2 years as well, which is good, actually. It's good to have long-term ideas of what your spending are going to be, or at least intermediate-term ideas of what your spending is going to be. The other piece that points me towards thinking you're going to get something done, you had, I think it was either yesterday or Wednesday, a number of members of the Congressional Budget Office over at Representative McCarthy's office. You don't call the CBO in unless you think you have a bill that you need to score.
Right.
Again, pay attention to what people do, not what people say, because you get all these things. Oh, I'm fighting for America. No, I'm fighting for America. Everyone's doing their I'm Spartacus moment.
Mm-hmm.
And the fact is, behind the scenes, pay attention to what's actually happening, not what people are saying. And the actions are pointing towards, we've made some real progress here.
Yeah, that's what it seems like, and hopefully we'll have an answer on that on Tuesday. Sooner. Sooner would be nice.
There's a 2-page article in the New York Times titled, Gasoline Prices, a Source of Pain Last Year, Have Come Down, and it spends 2 pages telling you that gas prices have come down.
I really looked for anything else here.
This article should have been a tweet.
This article shouldn't have existed as a tweet or otherwise.
It could have been. It's useful to know. It could have been 280 characters.
No, hold on. Who out there who consumes gasoline is unaware of the fact that gas prices have come down? Do you know anybody? My children maybe by definition consume gasoline because they sit in the back seat of my car.
We need a better phrase. Are we still doing phrasing? When you say consuming gasoline, it sounds like you're drinking the stuff.
Okay, fair enough. Using gasoline are unaware of that. My only example
what do you got, Tucker?
My children who sit in the back seat of my minivan technically are part of the cause that I have to buy gasoline and are probably unaware of the price differential over the last 12 months. Other than that, I think everybody knows. Drive past 3 of them on my way here, and I live 2 miles away.
I think I first started being aware of gas prices when I was 10 or 11.
Yeah, I think that's accurate.
Somewhere in that ball. I have a distinct memory of driving on Route 9 and seeing the 99-cent gas.
Oh, those are the days.
And
Current national average, according to AAA, $3.57 per gallon. Taking a look at Massachusetts, $3.51. New Hampshire, $3.45. Maine, $3.54. Vermont, $3.55. Tiny Rhode Island, $3.51. And Connecticut, $3.63 to round out the New England states for us.
So there's that. Speaking of this, there's a piece from the Wall Street Journal. America's travel resurgence. It's finally here. I think it's been here for a little while now, but what you are seeing is just the TSA throughput numbers, just because these are the easiest way for me to measure what we're seeing in terms of overall travel volume, just because you get the exact number of people who are flying on any given day. Yesterday, you had 2.65 million people who were flying. If you look at all of the days surrounding Memorial Day in 2019 before the pandemic, you had one that was in the ballpark of that high.
Wow. So we're well above 2019 trend. The other thing that seems to be happening is last summer, and certainly anybody that was traveling the summers before, although we know those numbers were a lot lower, was really pushing the Airbnb still. They were looking for that type of situation. They were also doing a lot of remote work while also doing vacation. I did that. November of 2020, my family went out to Arizona for 1 week of remote work, 1 week of vacation, stayed at an Airbnb for the whole time. That's not going quite the same way.
No,
Airbnb said that they're expecting lower Q2 rentals.
Yeah.
Their stock took a big hit. Hotels seem to be cleaning up right now. And then international also opens up, so that gives you a rough year-over-year comparison because very few people were traveling overseas over the last 3 years.
Let's take a quick break here. When we come back, we'll talk about the bridge repairs that they're trying to undertake on the Cape bridges, just in time for Memorial Day, right after this.
The latest news on inflation and how the markets are reacting every morning, right here on the Financial Exchange Radio Network.
If you're thinking of retirement in 2023, you'll need to create a plan to make it happen. Hi, this is Mike Armstrong from the Armstrong Advisory Group. A big piece of that plan is taking a closer look at your current income sources and expenses. You'll need to know if you have enough room in your budget to live comfortably and remain as financially secure as possible. What's really key is maintaining a reasonable withdrawal rate to help you avoid outliving that money. These are among the topics we discuss in our new free guide, How to Retire in 2023. Call right now and get your copy today at 800-393-4001. Don't wait too long to get your ducks in a row if this is the year for you to retire. Call 800-393-4001 and get your guide right now, or you can request it from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The United States Virgin Islands, St. Croix, St. Thomas, and St. John were recently voted a top Caribbean destination by Travel and Leisure magazine and several other top media organizations, as well as the best Caribbean islands to visit in 2023 by the Caribbean Journal. Spring has arrived in New England, but it's still a perfect time to head to America's Caribbean paradise. When you arrive, you'll enjoy some of the most pristine beaches in the world, incredible scuba diving and snorkeling, and world-class culinary offerings. Book your trip today and fall naturally in rhythm with the heartbeat of the islands, where the sun is strong, the clouds are few, and the weather is perfect every day. Travel from New England could not be easier, with no passport required, no money to exchange, and no travel restrictions to enter. Go to visitusvi.com and learn more about America's Caribbean paradise and book a trip today. That's visitusvi.com.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
My name is Dottie. This is my VA story. My father served in World War II. He was my hero. As he got older, he needed more help. VA New England Healthcare was there for him and our family every step of the way. VA New England Healthcare offers unlimited healthcare options. The best part? It never cost our family a single penny. As a veteran, my father deserved the best, and so does a veteran in your life. My name is Dottie, and I choose VA.
For more information, call 1-844-VA-CARES or visit vacares.us.
Tuning into the baseball game, monitoring the incoming storm, catching your favorite talk show. These are just a few of the reasons more than 80 million Americans depend on AM radio each month. And did you know AM radio is the backbone of the emergency alert system? It's reliable, free, and public safety depends on it. Text AM to 52886 and tell Congress we need AM radio in cars.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
Watch the show every day on Twitch TV, Facebook, and our website, financialexchangeshow.com. We're breaking down the biggest business stories of the day only on the Financial Exchange Radio Network.
Mike, what's going on with the bridges to the Cape?
I believe they're under construction, but I was just saying offline, I haven't been down to the Cape in quite some time, but they've been under construction. But the bigger story here seems to be the change in housing prices, specifically on the Cape. I mean, I know this is a nationwide issue, but when we look at housing prices in key vacation destinations across the country, such as the Cape, those are the ones that were most dramatically impacted during COVID. And what it's now led to, according to the CEO of the Cape Cod Chamber of Commerce, is that back in 2017, the Cape imported about a quarter of its workforce.
I love the term imported.
Yeah, I like that one.
Like, where'd they import it from?
Plymouth.
France?
Plymouth. Today, that number is close to half. So
it's too unaffordable to live there, and the inventory has been occupied by people who want part-time vacations instead of full-time residents.
I remember hearing about, I don't know if he was an electrician or a general contractor who was doing work on Nantucket specifically. Guy was making like just absolutely insane amounts of money because there's no labor there that can afford to live there, and so people make a good living doing it. But the average traffic, according to the Massachusetts Department of Transportation, estimates that 4 times as many cars cross the Sagamore Bridge between 5 and 11 a.m. heading to Cape as leaving it. So just everybody's commuting onto the Cape during rush hour because they can't afford to live there.
They need something better than bridges.
Not to mention the lanes give everybody anxiety. They're so narrow.
They're a little bit narrow. And again, it's also the fact that there's no median.
Yeah.
It's you're right next to cars going 50 miles an hour in the opposite direction.
You guys don't know about the tunnel?
No.
Well, so I have an alternative way that we could handle this.
Here come the soup tubes again.
It's soup tubes, but cars.
For people, you know?
Well, no.
You seen Willy Wonka?
So the thing that they actually really should do if they were serious about this, again, if you really have, a commuting situation, treat the exact same way that I would treat 128. You run a train along Route 6, the length of the Cape,
so it could
with
just
stops,
break down.
With stops at all the exits. Yes, so it could break down, Tucker.
Be delayed all the time.
Yes, you could have it be delayed.
Again, the train system in Boston works because everybody's going to the same place. If you're commuting onto the Cape, you're just not. Like, you're a contractor going to 3 different houses. Maybe you're an AC repairman going to a few different spots.
But these aren't all like.
I know that not everybody there is a contractor. Like, some people are working at a restaurant, but
most people, like, you didn't go from 25% of the workforce commuting to 50% because there aren't enough contractors.
But that's why public transit doesn't work that well there, is because if I'm commuting into Boston, I'm going within 2 square miles, and they're all giant high rises, and I can take the train to South Station and walk to everywhere I want to go. It's just not how the Cape works. I'm working at one of a few hundred different restaurants.
In that case, I think we should just get rid of the bridges completely. Make it an island. Make it a selling point. Hey, no, you can't get here unless you take a ferry.
You thought the Cape was expensive before.
Right. It's now even more exclusive. You need a helicopter to get there.
Yeah.
So, look, the obvious solution then is it's one of the rare instances where you just need more lanes. And wider ones, as Tucker has mentioned. But you need more lanes. I know that Massachusetts applied for a bunch of federal funding to try to replace the bridges. It was rejected, so they're trying to up the amount that they're going to contribute to hopefully get some again. But it's a mess. It's a mess trying to get over those bridges.
Or we could, do one of these whole things.
Monorail. hear those things are awfully loud.
It glides as softly as a cloud. Is there a chance the truck could bend? Not on your life, my Hindu friend.
What about us brain-dead slobs?
You'll be given cushy jobs.
Were you sent here by the devil?
No, good sir, I'm on the level.
The ring came off my...
Monorail. That's the solution. That is the solution. The United States Virgin Islands, St. Croix, St. Thomas, and St. John were voted a top Caribbean destination by Travel and Leisure magazine and several other top media organizations, as well as the best Caribbean islands to visit in 2023 by the Caribbean Journal. Spring has arrived in New England, but it's still a perfect time to head to America's Caribbean paradise. When you arrive, you'll enjoy some of the most pristine beaches in the world, incredible scuba diving and snorkeling, and world-class culinary offerings. Book your trip today and fall naturally in rhythm with the heartbeat of the islands, where the sun is strong, the clouds are few, and the weather is perfect every day. Travel from New England could not be easier with no passport required, no money to exchange, and no travel restrictions to enter. Go to visitusvi.com and learn more about America's Caribbean paradise and book a trip today. That's visitusvi.com.
Tesla has scored what I think is a monster win here in this deal with Ford that they just made. So starting this year, Ford F-150 Lightning, Mustang Mach-E, and E-Transit vehicles will be able to use Tesla superchargers. Starting next year, using an adapter that you have to buy. Tesla is the only company in the world that has its own plug. It's what Apple did with the Lightning charger. That's basically what Tesla has done with their vehicle chargers. They don't accept the regular standard that every other EV uses in the world. They made their own.
And presumably they patented it and made it so nobody else could use it too.
Yes. So by 2025, Ford has announced that all of their next generation EVs will be using the Tesla charging capability built in. And this is a monster win for Tesla because all of a sudden you have the ability to sell electricity to all of your competitors' vehicles, potentially, I would assume, at profitable rates.
Yeah, I mean, this is huge. Presumably, it's a good enough deal for Ford, too, because, honestly, they're just not at the scale required to build out a 12,000 charger network.
They don't want to do it.
It's a huge pain, and...
That's why they never built gas stations. Someone else can handle that.
It does bring up a good question. Should Tesla ever just spin off their charging unit? Right? Like, why is that necessary to the core function of your Tesla business model at this stage?
It probably can't make any money on its own right now, but yes, at some point. And this might be the first step to that.
Right. I mean, this is effectively operating it trying to get it operating to its own profitable company. Now, it is tricky because the Tesla vehicles come with free charging in a lot of cases.
Not anymore.
No.
None of them do.
None of them do.
No, they've gotten rid of all that.
Yeah.
The counterpoint to this is if you look at where the money's made in filling up cars now, none of it's on the gas.
True.
The margins are razor thin there, and you would imagine that over
Butterfingers.
time that happens here as well. So maybe there could be a 10-year window where there's a great business there, but then it's a melting ice cube. Yeah. Let's take a quick break here, but we got hour 2 of the Financial Exchange coming up, and stick around, and you get to hear all the fun stuff that we talk about. Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled How to Retire in 2023. Mike, what happens if you go through this process and you find out, gee, maybe the numbers don't add up to the kind of retirement that I wanted this year?
Yeah, so, I mean, first and foremost, make sure you do the numbers, right? Don't just base it on a rule of thumb. Make sure you've run the budget and understand where your spending is going to be. But if you do those numbers and you say, it looks to me like I'm on the edge, there are a few different ways to change things, right? I mean, one, if you're still not quite there, you could save more for retirement by working longer. You could take a look at your spending, obviously, right? If you can decrease your spending, that goes a long way because we're talking about a retirement in this country oftentimes lasting 20, 30 years, and that spending compounds.
The other thing you can consider, something like a part-time job or a phased-in retirement where you reduce your hours gradually over a couple of years.
That's one that people, I feel like, don't pay close attention to, but one that's become incredibly popular these days is, retirement to me does not necessarily mean what it meant to my parents. And yeah, I can't really see myself fully stopping work. Maybe I am working 20 hours or working as a consultant in some industry.
Our guide this month is titled How to Retire in 2023, and there are two ways you can request it. The first is by calling 800-393-4001. The second is by calling ArmstrongAdvisory.com. Again, the guide is titled How to Retire in 2023, and you can call 800-393-4001 or visit ArmstrongAdvisory.com to request it.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Tuning into the baseball game, monitoring the incoming storm, catching your favorite talk show. These are just a few of the reasons more than 80 million Americans depend on AM radio each month. And did you know AM radio is the backbone of the emergency alert system? It's reliable, free, and public safety depends on it. Text AM to 52886 and tell Congress we need AM radio in cars.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
My name is Dottie. This is my VA story. My father served in World War II. He was my hero. As he got older, he needed more help. VA New England Healthcare was there for him and our family every step of the way. VA New England Healthcare offers unlimited healthcare options. The best part? It never cost our family a single penny. As a veteran, my father deserved the best, and so does a veteran in your life. My name is Dottie, and I choose VA.
For more information, call 1-844-VA-CARES or visit vacares.us.
Proper estate planning is critical and may be the difference between retiring comfortably or living under incredible financial pressure. Cushing & Dolan can help. Call them today at 866-848-5699 and ask for their new guide called Detour Ahead, Estate Planning Blunders to Avoid. Don't put your assets at risk. That's 866-848-5699 or request it online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The United States Virgin Islands, St. Croix, St. Thomas, and St. John were recently voted a top Caribbean destination by Travel and Leisure magazine and several other top media organizations, as well as the best Caribbean islands to visit in 2023 by the Caribbean Journal. Spring has arrived in New England, but it's still a perfect time to head to America's Caribbean paradise. When you arrive, you'll enjoy some of the most pristine beaches in the world, incredible scuba diving and snorkeling, and world-class culinary offerings. Book your trip today and fall naturally in rhythm with the heartbeat of the islands, where the sun is strong, the clouds are few, and the weather is perfect every day. Travel from New England could not be easier, with no passport required, no money to exchange, and no travel restrictions to enter. Go to visitusvi.com and learn more about America's Caribbean paradise and book a trip today. That's visitusvi.com.
I studied Spanish in college and never got fluent. But then I tried Babbel.
Want the most effective way to learn another language? In just 15 minutes a day, Babbel's bite-sized lessons will have you learning another language in as little as 3 weeks.
Babbel is all conversation-based, so it gets you speaking quickly about things you actually talk about in the real world.
You'll really see a difference in how you can speak and how conversational you can be in just a few weeks.
Babbel isn't just lessons. You can listen to podcasts, play games, watch videos. You can even take live online classes with a language teacher. There are so many ways to learn with Babbel.
The lessons online and in the app make it easy to learn from pretty much anywhere. University studies have shown that using Babbel for 15 hours is equivalent to a semester of college Spanish. If you want to learn a new language, there's no better way than Babbel. Go to Babbel.com to try for free. That's BABBEL.com. Babbel.com.
This is Tucker Silva of the Financial Exchange, and I'm joined today by estate planning attorney Todd Lutzke with Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about the top estate planning mistakes to avoid. Now, Todd, in your opinion, what is the absolute biggest mistake a person can make when it comes to estate planning?
Well, they think about giving away their house. They always feel good, and they say, you know what, I'm going to give away my house, or I'm going to make a gift of a vacation home, or I'm going to, just get it out of my name. That way the kids have it, they enjoy it, and I don't own it anymore. And it seems so easy and so inexpensive. But folks, when I say it's one of the biggest mistakes, generally when you give away highly appreciated assets, which is generally what you have with an old house that you bought or an old vacation home that you've had for many years, you give your children the capital gains tax headache associated with it. You give them a carryover basis, so you're giving them a tax bill. In addition to giving them the tax bill because of the built-in gain, you're exposing it to all their creditors, their future divorces. This might not be the safest way to leave the asset to the family. So please don't make that mistake. Instead, think about your plan overall and put together an entire estate plan using trusts. You'll be much happier, and the family will be much happier and enjoy less taxes.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide called Detour Ahead: Estate Planning Potholes to Avoid. You can request this brand new guide by simply calling 866-848-5699, or you can simply request it at legalexchangeshow.com. Once again, the number 866-848-5699, or you can request it at their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by taking part in this year's DAV 5K. For more information, visit DAV5K.Boston. The DAV 5K Boston is proudly presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Well, it looks like we might be heading into Memorial Day weekend with a little bit of a relay going on, Mr. Michael.
Little long weekend rally.
Yeah, we get the Dow Jones Industrial Average, as it's known, up 315 points. The Standard & Poor's 500 is up 44 points. And we have the, let's see. Yeah, look at this. We've got the NASDAQ. Gee, even that's up more than the other ones. It's rallying. I'm pulling it up right now. 210 points right now. So you got all three major U.S. indices up. Russell 2000's up about 1% as well. 10-year U.S. Treasury selling off a bit to 3.85%. We've got oil at $72.30 a barrel, up 47 cents a barrel, but off its highs from earlier this week. Gold is down $2.80 an ounce to $19.40 and 90 cents. And, hey, markets are saying, yeah, we're cool. We're cool, man.
Not worried about this debt ceiling thing.
Yeah, I mean, look, that's the message that you've gotten all week. I mean, you had 2 little days where I won't even say things got scary. It was the S&P fell 2.25% off its early week high. I mean, that's a nothing.
I'm sorry to interrupt, but I see a moniker on Bloomberg that The question of the day is, does Europe need a recession? We just got finished earlier in the show talking about a wealth manager who's saying that the U.S. economy needs a recession to help markets, and I just don't understand the premise of the question.
It's like walking up to someone and being like, hey, you look like you're in really good health. Do you need to throw up? Like, no, I'd prefer not to. Let's just keep things how they are.
Does Europe need a recession?
Do you need a broken leg? No, I don't. I'm fine without it, thanks for asking.
No country needs a recession.
No. Now, I'm not saying that you should centrally plan everything so that you can avoid a recession, because I don't think that's possible nor the answer, and I think that's dumb for a number of reasons.
Sure.
Soviet Union, sorry. But I do think that rooting for a recession is probably worse than saying that you can prevent them.
Yeah.
Recessions happen. They're not preventable. You try
Part
to
of the normal business
you
cycle.
try to manage the consequences of them so that you don't get hurt too badly.
Yep.
But it's no different from the economy is a living, breathing thing. It is operated by living, breathing things. And sometimes living, breathing things need to rest. They need to sleep. The economy is no different. You can't just run at max speed all the time because preferences change and this and that. And sometimes you just say, okay, we've gone too far. We need to pull back and regroup. And you should never, ever, ever root for that.
You ever seen the movie Bubble Boy?
I don't think I've actually seen it. Have you?
I haven't either, but I think I understand the premise, which is if you try and, completely insulate something from ever happening, then it's going to have all sorts of adverse consequences. You shouldn't root for somebody to get sick.
Why'd you reference a movie that you haven't seen then?
I don't know. It just seemed like a relevant.
seemed
like a relevant comparison. I've seen parts of it.
There was Bubble Boy in Seinfeld. That's more famous than this garbage movie.
There's a Bubble Boy in Seinfeld.
Oh yeah.
The episode was titled "The Bubble Boy," I believe.
Oh yeah, I think I do remember that.
Jake Gyllenhaal was in Bubble Boy.
Was he really?
He's the lead. He's Bubble Boy.
Yeah.
It was like his first.
I didn't know that.
First movies.
He really went through some talk about people who have just had a complete transformation as an actor.
Tremendous actor.
It's to go from that to what has he been in lately? Has he done much in the last couple of years?
Let me.
He did a couple of those superhero movies. Wasn't he in the bad one though?
Did the ambulance one, which was on Netflix.
Wasn't he the guy in that bad superhero Morbius or whatever? Wasn't that him?
Spider-Man.
Who was Morbius?
I don't know what that means.
I don't know.
It was a bad superhero movie. No, that was Jared Leto.
Yeah,
sorry.
yeah.
Jared Leto. Anyways, let's talk about artificial intelligence. There's a piece in Bloomberg, and here's what it's titled. AI will supercharge productivity. Will workers benefit? Artificial intelligence promises greater gains than any technology before it, but it threatens to worsen pay and wealth inequality. No, it doesn't. Okay? It really doesn't. This is like saying that the automobile hurt horse and buggy drivers so much, and gosh, that really widened inequality. Ultimately, productivity growth is what makes the pie bigger. How the pie is actually distributed is a separate choice that we make as society.
Yeah. This is a political decision about wealth distribution.
If productivity is supercharged, that's what you want. You want the pie to get bigger. Right now, America has about 15% of the farm workers it did 100 years ago, but produces 4 times as much food.
So the answer to the question in my mind is,
and that's a good
potential technologies like this, you're right, have the possibility of increasing the size of the pie. There will absolutely, but however, will workers benefit is, an interesting question. The answer is a lot of them will, some of them won't. That's pretty much what happens every time there's a increase in productivity through a new technology.
Creative destruction is the term, I believe.
How many people was it their job to handwrite spreadsheets in the 1960s to run financial calculations and analysis for accounting firms, banks, and everything else? A lot. And then the computer came around, Microsoft Excel with floppy disks came around, and a bunch of those people did not have the same jobs anymore. Are there fewer financial services jobs out there now?
No.
Fewer way more. Stock trading. All used to be done on a floor. A bunch of people in New York used to, put their hands up and do weird gestures to figure out, what the price was going to be for stock trading. Then we have all electronic stock trading. Are there more people or fewer people working in stock trading now?
More.
Way more. I would say that might be problematic. Like, I don't know that I love the idea that a PhD physicist has all these new potential job openings in the stock trading universe these days, but that's what happened.
I think that when we look at this and the potential for AI to reshape what the world looks like, it always comes back to the idea that, and again, Mike mentioned, look, we've got all these, there are more people in these industries than before technology, impacted
Disrupted them. Yeah.
Ultimately, every time you solve a problem, you're presented with a series of new problems that you now have the opportunity to solve with your newfound free time. If AI is solving a lot of the problems that we currently have, it frees up our time then to go and do other things that that solve other problems that we previously haven't been able to get to. It's kind of like, let's say that you're out in a field somewhere. Okay?
Yes.
You get hungry. You got to go and find something to eat.
Okay.
You spend all day looking for a rabbit.
Uh-huh.
And you finally catch one 3 days later. But you wasted 3 days of your life catching the rabbit.
Yeah.
Today, you can walk into a McDonald's and have a meal in a minute.
Yeah.
You don't have to spend 3 days of your life catching a rabbit for the first time.
But I have diabetes.
You got diabetes, and that's the new problem you have to solve.
Yeah.
But you don't have to spend 3 days of your life catching a rabbit.
True.
And so now it's, hey, great, we've got, what is it, Ozempic now that is, helping a whole bunch of people lose weight and treat diabetes.
Yeah.
We are solving the next problems. And this is what progress is all about.
Do you often find McDonald's in the middle of fields?
I had McDonald's this week, by the way.
Was it in an open field?
No, it was on a rest stop on the side of 128.
Oh,
and it was
I see.
delicious.
Just as beautiful.
It was delicious, might I add.
A majestic field called the Expressway.
A nice 20-piece McNuggets down the hatch.
Oh, God.
Outstanding.
Yeah.
But I just don't buy this idea that just because AI is going to disrupt the world, that you are going to inherently have inequality become worse.
Yeah, I don't either. Like I've said before, there are a lot of people who I genuinely believe their jobs will not be relevant anymore, and their companies will not be relevant anymore. I heard an interesting one that I hadn't considered before, but companies that own stock images.
Oh, yeah.
You're getting crushed right now because you can create a brand new image using artificial intelligence that nobody has ever created before, and you don't have to license it anymore. Companies are just done.
Wow. Well, but yes, you're going to license it from them because either you're going to have to license the technology or the image that the AI is generating.
Yeah. So, which one's cheaper now? Probably the AI-generated image. Maybe it goes back, but there are whole industries that will be disrupted by all this. It doesn't mean that we as a society are going to be dealing with more significant problems as a result of that.
No, I mean, like the obvious one, just with the current way that we look at generative AI, is copywriters.
Sure.
That's a business. If you are a freelancer who's offering, copywriting services to different businesses,
there's going to be less of it to go around.
The next decade's going to be tough for you.
Yeah.
It's going to be tough. Let's take a quick break here, and when we come back, we're going to do a little bit of trivia. We're also talking U.S. and China, but first, here is a salute to our soldiers.
Salute to our veterans is proudly presented by VA New England Healthcare. Today, we honor U.S. Navy veteran Jim Christie. Jim served for 20 years in legal services on active duty, with deployments all around the world. Thank you for your service, Jim. If you or a loved one served this country, get the health benefits you earned and deserve. Call 844-VA-CARES. That's 844-VA-CARES.
Business and financial news affecting the markets and your wallet. We've got it all, straight from Wall Street, right here on the Financial Exchange Radio Network.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. If you hope to retire this year, you need to have an income plan in place to generate the resources that you'll need to maintain your desired lifestyle. You also need a sound withdrawal strategy to help you avoid outliving your assets. It may be easy to think about retiring, but putting together a retirement strategy is a different story and one that we may be able to help you with. These are just a few examples of topics we cover in this month's new free guide, How to Retire in 2023. Don't wait too long to get your ducks in a row if this is the year for you to retire. Get your free copy of our new guide, How to Retire in 2023, today by calling 800-393-4001. That number again is 800-393-4001, or you can also request the guide right online from our website at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
AM radio provides always-on news, sports, talk, traffic, and weather reports. And it's also a vital service that provides important emergency information when your community needs it most. Tell Congress you need AM radio to stay in your car. Because when cell phones and the internet are down, this free emergency service is critical. Text AM to 52886 and tell Congress we need AM radio in cars.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange Quick Tip of the Day. And today we're talking about the top estate planning mistakes to avoid. Todd, what is the downside of adding your beneficiaries to your accounts or adding their names to your real estate deeds as a joint owner? Won't this avoid probate?
Yeah, it sure would. And again, sometimes simple is not always better. And that's what I want to focus on here, folks, is it seems easy to throw an account name, like say I've got a child living nearby, I add their name to my account because it's convenient, but I've got 3 other kids or 2 other kids. Well, when I die, that asset will go directly to that joint owner. Yes, it will avoid probate, but at the end of the day, I could be disinheriting my other children by accident. I certainly don't want to do that. I also expose that asset, at least 50% of that asset, to my child's creditors while I'm living. I don't think I want to do that. And especially, folks, when it comes to real estate, don't add a child's name to your real estate deed, because that not only exposes it to the child's creditors and future divorces, but at the end of the day, you've also given away half the house, trapping half the capital gain in that property. Again, in essence, giving your child a tax bill when you give away highly appreciated property. So do an entire estate plan. Don't just make quick knee-jerk reactions.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide called Detour Ahead, Estate Planning Potholes to Avoid. You can request this brand new guide by calling 866-848-5699, or you can request it from LegalExchangeShow.com. Once again, the phone number, 866-848-5699, or you can simply request it online at their website, LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. For your chance to win our daily trivia contest, text us at 617-362-1385 and use keyword ENCORE. Complete rules are available at financialexchangeshow.com. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. St. Croix, St. Thomas, and St. John were named the best Caribbean islands to visit for 2023 by the Caribbean Journal. So act now and fall naturally in rhythm with the heartbeat of the islands as you enjoy some of the most pristine beaches in the world along with world-class culinary cuisine. Visit usvi.com right now and book your next vacation today. That's visit usvi.com. Time for trivia here on the Financial Exchange, and it's brought to you by Encore Boston Harbor. Visit EncoreBostonHarbor.com and see for yourself why Encore is a Forbes 5-star award winner for both hotel and spa. Well, in case you missed it, yesterday, Tom Hanks delivered the commencement speech at Harvard. Since Tom is in town, maybe still today, I don't know. Maybe he's listening. Today's trivia will be about his career. Tom Hanks and Meg Ryan famously starred in 3 movies together. The most famous movie with the pair as stars was Sleepless in Seattle in 1993. They followed up that romantic comedy with You've Got Mail in 1998. But the duo starred in an earlier romantic dark comedy years earlier. Our trivia question today: what was the first movie to star Tom Hanks and Meg Ryan? Once again, what was the first movie to star Tom Hanks and Meg Ryan? Be the 5th person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Encore Boston Harbor. Be sure to include the keyword Encore in your text, and we'll give away that gift card in the next segment. 617-362-1385, and the 5th correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Mike, do you remember over the last week or so, there have been a number of pieces that have popped up in different publications talking about, hey, here's, the U.S. has a chance to repair its relationship with China, things along those lines.
Yeah, not so much of it this week, but yes, last week
and
leading up to that, there were quite a few of those. In fact, President Biden himself said, I don't know the exact quote, but something along those exact lines, that I expect our relationship will improve shortly.
So here is so yesterday, you had a dinner between Commerce Secretary Gina Raimondo and her Chinese counterpart, Wang Wentao. They had dinner in Washington. I don't know what they dined on, but it probably wasn't my 20-piece McNuggets meal.
Probably not.
Probably not. There's this piece that comes out from the Wall Street Journal then, and I just want to focus on the headline. And granted, headline writers aren't the ones who write the piece, but the headline is, Pressure Mounts for U.S. Response After China's Micron Ban. And the reason why I highlight the headline is because most readers pick up the headline and then that colors how they view everything else, if they even read the rest of it.
Yeah.
When you read that headline, does that sound like there's optimism after this meeting? No, it does not. And so I think if there was actually real progress made at said meeting, it would have been, productive meeting, talks to continue. Instead, you get some, sentences in this piece talking about, hey, we were hoping to change, how things have gone. But then there's all this talk about, all of the different economic the different economic coercion that Beijing goes on to, play up in a number of different paragraphs here. Again, you have to read between the lines and ask yourself, why am I reading this now? You're reading this specific piece written this way because things didn't go well, and now you've got the White House saying, okay, we got to prepare people for the fact that things might get worse.
And by the way, I don't actually think that the United States needs to do really anything to respond to China's Micron ban. And frankly, we've already banned so many imports of Chinese technology at this stage that all you have to do is just disengage from talks to send the message that this is not going well. I genuinely struggle to think of what technology that we import from China could we ban here to retaliate on the Micron ban. And there's honestly not a whole lot left.
Both sides described the meeting in positive terms and noted the importance of keeping communication channels open. So
they didn't slap each other.
No, but it's
the best thing that can be said about the meeting.
Yeah, it's, again, domestically in both countries, the politics point towards it not really being... It is not an easy path to try to get to cooperation on these types of issues.
Right. And, at the end of the day, we have now set things up on a path for at least large international companies that operate specifically in the high-tech space where they really have to choose. We've forced a decision to be made on either do business with the Western world and leave China, or go all in on China, but it's probably not going to be both, or if it's both, we're not going to make your lives terribly easy.
Want to touch on Meta a little bit here. Mark Zuckerberg was up in front of the troops yesterday, and after the second round of layoffs that they've gone through, he wanted to say, hey, I love you guys. Let's go and do some awesome things. Quote, going through restructuring and layoffs and changes like this are a very difficult thing, so it's not like we're going to end up in exactly the place that we were before because that wasn't my goal. I wanted to get to a scrappier place. So, first things first.
Scrappy-Doo comes to mind. Yeah, me too.
Meta did have an awful lot of bloat and needed to get rid of that.
Seems that way.
I mean, again, what had they really done in the last few years?
The metaverse, bro.
Don't get me started.
Yeah.
But when you think of Mark Zuckerberg, scrappy's the last adjective
that's
that
why
comes
I brought
to
up
mind.
Scrappy-Doo.
What's Scrappy-Doo?
Scooby-Doo? Scrappy-Doo?
It's a little pal Scrappy-Doo.
Is that
Yeah.
I've literally watched one episode of Scooby-Doo in my life.
So this is Scrappy-Doo. It's a tiny little Scooby-Doo, and he's scrappy.
Yeah, he was kind of a little jerk.
Oh, okay.
Yeah. That's the Zuckerberg.
That's fine. Yeah. Let's take a quick break here.
All right.
When we come back, we've got the trivia answer after this.
The Financial Exchange is live on Facebook, so make sure to like our page and watch the guys break down the latest on the markets every day beginning at 10 on the Financial Exchange Radio Network.
My name is Dottie. This is my VA story. My father served in World War II. He was my hero. As he got older, he needed more help. VA New England Healthcare was there for him and our family every step of the way. VA New England Healthcare offers unlimited healthcare options. The best part? It never cost our family a single penny. As a veteran, my father deserved the best, and so does a veteran in your life. My name is Dottie, and I choose VA.
For more information, call 1-844-VA-CARES or visit vacares.us.
AM radio provides always-on news, sports, talk, traffic, and weather reports. And it's also a vital service that provides important emergency information when your community needs it most. Tell Congress you need AM radio to stay in your car. Because when cell phones and the internet are down, this free emergency service is critical. Text AM to 52886 and tell Congress we need AM radio in cars.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
Proper estate planning is critical to you being able to enjoy your retirement years, and may be the difference between retiring comfortably and living under incredible financial pressure. Creating an estate plan can be a difficult process if you aren't working with an expert who will make sure that your plan is secure. Cushing & Dolan can help. Call them today at 866-848-5699. Estate planning is their business, and they have a new guide out this month called Detour Ahead, Estate Planning Blunders to Avoid. Don't put your assets at risk and open yourself up to severe tax consequences. Even if you already have a plan, this guide may help you correct an issue that could come back to bite you in the years to come. Call right now, 866-848-5699, and get your free guide today. That's 866-848-5699, or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The United States Virgin Islands, St. Croix, St. Thomas, and St. John were recently voted a top Caribbean destination by Travel and Leisure magazine and several other top media organizations, as well as the best Caribbean islands to visit in 2023 by the Caribbean Journal. Spring has arrived in New England, but it's still a perfect time to head to America's Caribbean paradise. When you arrive, you'll enjoy some of the most pristine beaches in the world, incredible scuba diving and snorkeling, and world-class culinary offerings. Book your trip today and fall naturally in rhythm with the heartbeat of the islands, where the sun is strong, the clouds are few, and the weather is perfect every day. Travel from New England could not be easier. With no passport required, no money to exchange, and no travel restrictions to enter. Go to visitusvi.com and learn more about America's Caribbean paradise and book a trip today. That's visitusvi.com.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange Quick Tip of the Day. And today we're talking about the top estate planning mistakes to avoid. Todd, what is the downside of adding your beneficiaries to your accounts or adding their names to your real estate deeds as a joint owner? Won't this avoid probate?
Yeah, it sure would. And again, sometimes simple is not always better. And that's what I want to focus on here, folks, is it seems easy to throw an account name, like say I've got a child living nearby, I add their name to my account because it's convenient, but I've got 3 other kids or 2 other kids. Well, when I die, that asset will go directly to that joint owner. Yes, it will avoid probate, but at the end of the day, I could be disinheriting my other children by accident. I certainly don't want to do that. I also expose that asset, at least 50% of that asset, to my child's creditors while I'm living. I don't think I want to do that. And especially, folks, when it comes to real estate, don't add a child's name to your real estate deed, because that not only exposes it to the child's creditors and future divorces, but at the end of the day, you've also given away half the house, trapping half the capital gain in that property. Again, in essence, giving your child a tax bill when you give away highly appreciated property. So do an entire estate plan. Don't just make quick knee-jerk reactions.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide called Detour Ahead, Estate Planning Potholes to Avoid. You can request this brand new guide by calling 866-848-5699, or you can request it from LegalExchangeShow.com. Once again, the phone number, 866-848-5699, or you can simply request it online at their website, LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Miss any of the show? You can catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon, where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
Trivia question today was, what was the first movie to star Tom Hanks and Meg Ryan? Well, that would be Joe versus the Volcano, which I've never even heard of. In 1990, Tom Hanks and Meg Ryan starred in Joe versus the Volcano, a movie about a hypochondriac that learns he is dying and he accepts an offer to throw himself in a volcano at a tropical island, and along the way learns to truly live. Real crowd pleaser, I guess. I don't know. It's a weird plot. Winner of the t-shirt was Roberta from Dedham, Mass. Congrats to Roberta. And winner for the week for the $100 Encore gift card, Michael from Nashua, New Hampshire. So congrats to both winners today. And, of course, trivia brought to you by Encore Boston Harbor. Visit EncoreBostonHarbor.com and see for yourself why Encore is a Forbes 5-star award winner for both hotel and spa.
Mike, there's a piece in CNBC. It's titled, Young Adults Are Taking Longer to Reach Key Life Milestones, Impacting Finances Later. And it also gets into a little bit of chatter about how parents can help to navigate whether or not to be assisting children on some of these larger things that they're trying to do financially.
Yeah, so first in terms of that data, so in 2021, adults who were 21 years old were less likely to have a full-time job, be financially independent, living on their own or married, or have children compared to their predecessors from 1980. And I don't think most of that's not surprising. College attendance rates are way up since 1980. We know the marriage average age is way later than 1980. And the way they're defining financially independent, fairly low bar. It's basically 150% of the federal poverty level, which is for a single individual like $14,600. So basically, if you're making $10.50 an hour at 40 hours a week, then they consider you financially independent, according to this. And a pretty small portion of today's 21-year-olds are there.
So if you're talking to a parent then and trying to get them, they come to you and they're saying, hey, what should I be doing in terms of helping out my children because they want to buy a house or they're trying to even just get an apartment on their own? How do you try to balance the desire to help them with hey, maybe it's, they need a little tough love here and there.
Yeah. Well, one, I still relatively new to this parenting thing, so I'm gonna avoid the question about how to properly parent your children because my kids are only like 6.
No,
so
there's
I don't
a
have
right
as much,
way to do it, Mike.
There's
There's a right way to be a parent and
as
a wrong way.
Some of our
obviously.
listeners, obviously, but obviously there are a lot of big financial decisions, and before you even get to the 21-year-old, the cost to raise a kid today. Astronomical.
It's not cheap.
According to the Brookings Institute, this is data from just last year, so it takes into account recent inflation. The cost in the United States on average to raise one child before college, through the age 17, expected to be $310,000. So that includes a number of things. Like, Tucker, I know right now you're putting an addition onto your home, frankly, because you have a growing family. So it includes housing. It includes food. Presumably I'm living in a bigger house right now because I have 3 kids.
The food's the biggest part, man.
I would say the housing cost is pretty big.
My kid's 2, and she eats almost 3 now. She eats a freaking pint of raspberries a meal.
Yeah.
But where does it go? That's $4 down the drain right there.
$310,000.
The blueberries are too damn high. Let me just say that.
The blueberries are fine. It's the raspberries and the blackberries are the problem. I'm very pro melon.
Yeah, that's a lot of bang for your buck.
Yeah, especially you don't buy the cut ones. You cut that thing yourself. You do the labor.
Yeah.
But anyways, I digress.
Then you get into college costs, and I was taking a look. Tucker, do you know the largest school by attendance in Massachusetts?
It'd probably be UMass Amherst, right?
Close. Very close second. Boston University, actually the largest school by attendance in Massachusetts. Total cost of attendance at BU, by the way, $86,000 a year. So that includes your room and board and your tuition, no scholarship or anything along those lines. $86,000 a year with books.
86.
So
that's $360,000 for 4 years.
Yeah. Now, I went then and looked at the other largest schools across New England here. UMass Amherst is coming in just shy of $36,000. UNH is about the exact same place. UMaine, a little cheaper, $28,000 for in-state. These are all in-state tuitions, by the way, because they're state schools. UVM, $36,000. URI, $30,000. UConn, $35,000. So, I mean, you can do this on a bit more of a budget, but you're looking at $310,000 by the time they are 17 years old. And then depending on what your goals are with helping out for college, you can be adding another several $100,000 on top of that if you're covering the whole bill. My point with all this is obviously it requires a fair bit of planning, and there's a lot of tools out there to try and navigate it.
I thought you were going to say your point was don't have kids.
That's the best piece of financial advice you can give.
It might be
4 years ago.
It might be the worst life advice, but the best financial advice.
Yeah.
Right?
You want to die a millionaire? Don't have kids.
You want to die alone? Don't have kids.
Oh, yeah.
It
cuts both ways. But then, so what this was really talking about, though, was once you've already gotten there, right? This is, CNBC and Bankrate is talking about, okay, you've already gotten there. Your kid's 21 years old. In a lot of cases, they've already graduated college, and then I'm considering them helping beyond all of that. And that, that's a whole different additional set of questions that you have. Like, hey, do I have more than one kid? If I'm helping this one, and this applies to college planning too, like, hey, I'm planning for covering the entire cost of my oldest son's tuition, but I've got a daughter that's 2 years younger, and she's going to be entering college 2 years later, and I'm suddenly going to have to pay 2 tuitions at the same time. Can I actually afford to do that?
Or if Jimmy gets a full scholarship, do I give his money to someone else, or do I just give him... Like, these are things that, what's actually fair and what's not.
Right. So we do put a lot of focus on that fairness question, and it's a complicated one. But, I mean, really beyond that, it comes down to the budgeting. Like, hey, if I'm going to help out an adult child that I've already probably helped out quite a bit, is can I do it, and can I do it without harming my own retirement? And if I can't, am I willing to sacrifice my own retirement to make these decisions? And... what should be a simple question like, hey, can I afford to help somebody out with a down payment on their first home or help them out with a big car repair? Ultimately comes back to the overall big financial plan of how does it all work and will I have enough money to make it all happen? So if this type of thing is coming up in your life, if you have questions, you can call us. This is Mike from the Armstrong Advisory Group, by the way. I know we were just chatting about all this. But if you have questions like this is what we do day in, day out. You can call the Armstrong Advisory Group at 800-393-4001. Talk to a real live human being if you'd like. Again, that number's 800-393-4001. We also have a ton of good stuff up on our website, armstrongadvisory.com. And if you want to, you can actually book an appointment with a member of our staff right there by clicking the Get Started button. So again, armstrongadvisory.com or 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Taking a look at markets right now, still a big upward rally going on. The Dow's up 300 points, S&P up 46, NASDAQ up 233, almost 2% there. Why don't we take a quick break now, and when we come back, we are going to be joined by Mr. Paul LaMonica right after this, and we're talking about Nvidia's big day yesterday.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. There are plenty of mistakes that you can make while creating your estate plan. Learn about these critical errors so that you can make the right decisions to always protect your assets. Call Cushing & Dolan right now at 866-848-5699 and get their new guide called Detour Ahead, Estate Planning Blunders to Avoid. That's 866-848-5699 or request it online from their website, legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
The United States Virgin Islands, St. Croix, St. Thomas, and St. John were recently voted a top Caribbean destination by Travel and Leisure magazine and several other top media organizations, as well as the best Caribbean islands to visit in 2023 by the Caribbean Journal. Spring has arrived in New England, but it's still a perfect time to head to America's Caribbean paradise. When you arrive, you'll enjoy some of the most pristine beaches in the world, incredible scuba diving and snorkeling, and world-class culinary offerings. Book your trip today and fall naturally in rhythm with the heartbeat of the islands, where the sun is strong, the clouds are few, and the weather is perfect every day. Travel from New England could not be easier, with no passport required, no money to exchange, and no travel restrictions to enter. Go to visitusvi.com and learn more about America's Caribbean paradise and book a trip today. That's visitusvi.com.
My name is Dottie. This is my VA story. My father served in World War II. He was my hero. As he got older, he needed more help. VA New England Healthcare was there for him and our family every step of the way. VA New England Healthcare offers unlimited healthcare options. The best part? It never cost our family a single penny. As a veteran, my father deserved the best, and so does a veteran in your life. My name is Dottie, and I choose VA.
For more information, call 1-844-VA-CARES or visit vacares.us.
If you're thinking of retirement in 2023, you'll need to create a plan to make it happen. Hi, this is Mike Armstrong from the Armstrong Advisory Group. A big piece of that plan is taking a closer look at your current income sources and expenses. You'll need to know if you have enough room in your budget to live comfortably and remain as financially secure as possible. What's really key is maintaining a reasonable withdrawal rate to help you avoid outliving that money. These are among the topics we discuss in our new free guide, How to Retire in 2023. Call right now and get your copy today at 800-393-4001. Don't wait too long to get your ducks in a row if this is the year for you to retire. Call 800-393-4001 and get your guide right now, or you can request it from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is now available on your Alexa smart speaker. Ask to play the Financial Exchange and catch up on anything you might have missed. This is the Financial Exchange Radio Network.
Ladies and gentlemen, the weekend.
The Financial Exchange is proudly partnered with VA New England. If you or a loved one serve this country, get the health benefits you earned and deserve. Call 844-VA-CARES. That's 844-VA-CARES.
As promised, we're now joined by Paul LaMonica from Paul LaMonica. And, Paul, how are you today?
I'm good, thanks. Thank you very much. Yeah, check out my Substack, since, as you pointed out, I'm on my own right now.
Paul, let's talk a little bit about Nvidia from yesterday. They reported earnings after the bell on Wednesday, and for the second time this year, first one being back in February, in a market that was looking a little bit shaky before their earnings report, they come out and basically save the market for at least, a day, it seems like. They were up 25% yesterday. What's going on here?
Yeah, Nvidia is just a beast right now because of the massive growth that it is expecting in sales and earnings as a result of this artificial intelligence boom. Because, Nvidia is a leader in graphics processing units, GPUs, and those types of chips are really the backbone to the AI applications that everyone is talking about right now, and that obviously not just ChatGPT, but, of course, Google and Microsoft are investing heavily in AI as well. So if Nvidia is the leading company that is supplying these chips for AI applications, you can understand why there's so much hype. And as a result, we now have a nearly $1 trillion market cap for this company. It's stunning.
Here's the question that you get to ultimately, though, which is, you mentioned hype. And it's feeling to me like we've gone through this pivot on kind of the next big thing in tech over the last few years, from EVs to crypto to Web3 and now to AI. And I can't help but feel like the valuations on some of these stocks, like Nvidia specifically, are so high that you just wonder how the future returns of the stock can be anywhere near decent, given how steeply it's priced now.
No, it is a great question. Obviously, when you look at Nvidia, I think it's PE on forward earnings is approaching triple digits. I think at last check it was in the mid 80s. It's a very frothy valuation, but the company seems to be justifying it by delivering this incredible revenue growth and these extremely optimistic forecasts. But what I think really is going to be difficult to try and figure out, to get to your point, is how much of this is being baked in right now. I think that if we went back in time to the early 2000s, late 1990s, there was obviously a lot of speculation about how e-commerce would change the universe. And at that time, Amazon seemed like an insanely valued stock. Of course, Amazon wound up living up to the hype and diversified as well. I think maybe the same thing could happen with Nvidia. Remember, Nvidia has positioned itself because of its graphic processing prowess to benefit from this AI revolution that we're seeing right now. I mean, before this, Nvidia obviously had a lot of hype around graphics processing and its use in gaming, as well as crypto mining. So I do think that there may be more there to artificial intelligence than there was to maybe, say, cryptocurrencies, which I think that has proven to be maybe more of a niche market that has really had way too much hype, and it's as we've seen from the price of Bitcoin tumbling down from its highs. Maybe there wasn't as much there as we thought, but right now it does appear as if so many tech giants are all racing to invest in artificial intelligence. Either they're all wrong, or this is a legitimate tech revolution, and Nvidia seems primed to be one of the major beneficiaries.
Fantastic. Paul, we appreciate you joining us today. Thank you so much for the time, and I hope you have a great Memorial Day weekend.
Thanks a lot. Same to you guys.
That is Paul LaMonica talking about Nvidia. Anything else to add, Mike?
Not on Nvidia, no.
Can we talk about killer whales?
Please.
So, for the last week or so...
Friday here on the Financial Exchange.
No, this is just cool Friday. Well, and kind of scary, actually. Orcas off the coast of Spain and Portugal have sunk at least 3 boats now in the past week and a half. And it's starting to become clear that it is a deliberate thing that these orcas are doing. And they're not entirely sure why, but they think that this one orca had some kind of run-in with a boat once and basically doesn't like boats, and now is teaching other orcas how to sink little boats. Which...
animals are striking back.
I'll tell you this. I've always believed that if it weren't for the fact that they don't have opposable thumbs, dolphins would basically put us out of business very quickly.
God, there's a Simpsons episode about everything, isn't there?
Is there?
Yeah, there's a Simpsons episode about the dolphins leaving the ocean and taking over.
Oh, I've never been a big Simpsons guy, so I'm glad that we're bringing it full circle. But, I mean, is this something you ever thought you'd see in your lifetime, that orcas have started... Wasn't this the premise of Jaws, basically?
It was a shark. Yes, never trust
I know
the
it was a
orcas.
shark, but...
Never trust the orcas. That's why we call them
I
killer
don't know if you
whales.
knew that, but...
Did you guys ever see Deep Blue Sea?
Yes. Sam Jackson was out quick.
So that's the best part of that movie is you get about 55 minutes into it, and the sharks start eating people on the whatever you want to call it.
It was like underground, wasn't it?
It was like an underwater research facility. Yeah. And so Samuel L. Jackson, starts to rally everyone together, and as he's giving the speech, he gets eaten by a shark.
Yeah.
It's just
stuff.
A shark ate me.
It's just so good. Really a horrible movie other than that. But
it's terrible.
But I do like the fact that, you start getting, okay, this is how they get, and then boom, the shark gets him right in the middle of the speech.
Good writing.
It was like 20 minutes into the movie.
Yeah.
Like, bye, biggest actor in the movie.
It's kind of like in Executive Decision. Steven Seagal doesn't even board the plane. He gets sucked out of the stealth fighter. He was the biggest actor in there. Kurt Russell was not the biggest guy at that time. It was Steven Seagal was the man in that movie. Dead in the first half hour.
Love it.
Kurt Russell, you're up.
I have just one item. When delivery costs more than the food you ordered, that's the headline from Bloomberg.
Then you shouldn't order it.
Yeah, that's my sub-headline is, if you are using it, you had better be damn wealthy. That's crazy. I'm paying $14 in delivery and convenience fees plus tip for a $6 coffee order. That's bad math.
Seems like a good deal to me. I don't know. Get your coffee fix.
Sorry, not $14. $8 for delivery and tip.
Right, just go pick it up.
What have
It's
we
too
become?
far.
Just go pick it up.
It's half a mile. It's
Diners
too
end
far.
up paying, on average, this is according to McKinsey, 40% premium on the menu price once they add in delivery fee, tip, and platform services.
And honestly, in a lot of those, the menu items are priced higher on those services, well, to compensate for how much those places take.
Get out of your apartment and go walk to the local restaurant. Dear God.
Or drive if you live in the suburbs.
Yeah.
Either one.
Works
We
great.
are done for the day and for the long weekend, but I hope everyone has a great Memorial Day weekend, and we're going to see you back here next week on The Financial Exchange.
My name is Dottie. This is my VA story.